Awesome, Arvind. Thank you so much for joining. Really appreciate it, guys. Arvind is an ex banker and finance professional with more than 25 years of experience leading some of the top banks and NBFCs in India as well as in the Middle East. So, really great having you, Arvind, for the spaces.
Thank you so much, and it's a pleasure to be on this platform.
Awesome. Arvind, let's start from the top and with the US Federal Reserve's action last week. 75 basis point rate hike, highest since 1994, balance sheet unwinding, yet inflation remains rampant. What is it that the Fed is doing wrong and how do they course correct?
I think everything takes time. You can't just bring down inflation with one or two rate hikes. It will take time for the inflation to. It's already, I think, peaked out. Probably from here on, you will see a gradual decline in terms of the inflation. And if crude were to kind of correct further from here down, it was going to help the US inflation and inflation in India to come down, because crude is a very important commodity when it comes to inflation. You have a domino effect in that sense that everything that's transported is through the use of energy, whether it's or petrol or diesel. So if it remains high, obviously the product prices will remain high to that extent. And my guess is in the next 2, 3 months, you will see probably some decline on the inflation front. And hopefully in the next 6 months is going to cool off if we see another couple of rate hikes from the Fed in the next 2, 3 months.
All right. And I think that is probably priced, and we know that this is not enough and there are going to be further rate hikes. But Arvind, do you think that the Fed is really way off or behind the curve and we are headed for a recession? If yes, what would be the fallout from this?
Well, first question, let me take it up. Yes, Fed has been behind the curve, and so are other central bankers. They had been kind of pumping and maintaining that liquidity because they wanted the growth engine to continue for their economies. But as you saw, that liquidity was driving commodity prices, crude prices, and stock prices to that extent. So obviously, it had an effect on everything. Inflation was one of them. Commodity prices went through this roof. And now Fed is trying to correct as quickly as possible. They know that they've kind of they never realized that the inflation number could be as high as 8% in the US. They always talked about, if you look at the Fed statements in the last 9 to 10 months, they always maintained that inflation is transitory, it will come down, and so on and so forth. But we all know that inflation is it was very sticky at that point in time, and I maintained that view that the more you delay, the more it's going to give pain to the people of that country, for that matter. And now they've realized that when people have started kind of voicing their concerns, so obviously Fed is trying to suck out liquidity as quickly as possible with their rate hikes. And we will see some bit of inflation cooling down. It takes a little bit of time to settle down, actually, if you ask me. So, could you repeat your second question if I've missed out?
Yeah, I meant to ask you is that could we be heading towards a recession? Because every other day there's some or the other foreign brokerage report that comes with, say, X percentage probability of a recession happening by mid 2023. Are you also of the similar opinion?
So I am not an expert or an economist to probably predict whether we're going into a recession or not. But I have also read a lot of reports by these investment banks like Goldman or Morgan Stanley that there is a 95% chance of US going into recession. So I'm not sure whether we will go into recession, whether it's going to be a mild one or whether it's going to go a strong recession. So we'll have to wait and watch how inflation cools off, and what is the next step that Fed has in mind if they think that they will go into recession. So we'll have to probably wait and watch. But I probably cannot comment that we may go into a recession, we may not go into a recession. So it's very complex for me to kind of forecast or judge something like this.
So I will quickly come in and help us understand. You expect More market correction, or is the worst behind us?
So if you look at it, last 2 years since the time the start of COVID-19, we've built a bubble so large, it will take time to deflate that bubble. So you can't say that in 3 months' time or 4 months' time, probably the bubble will get deflated and everything will come back to normal and we will start a growth phase again. So this probably again the selling, the correction should take time, and you have like over enthusiasm on the positive side, and you have pessimism on the negative side. So we've kind of seen that over enthusiasm in the last 2 years when everything was so bullish and people were saying that markets can just keep going up, 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 and now margins are going to improve, profits are going to increase. But now we haven't seen that pessimistic view coming in as yet. So my guess is that probably we're not done with the bubble deflation. There would be some more time we may take to kind of deflate the entire bubble that's been built in the last 2 years. And then probably there could be some pain in terms of the sideways movement, because most people probably then give up and then they don't buy those stocks, and thinking that they may go further down or they may lose their capital. So then you
Right.
have a sideways movement, which is again very painful for investors.
True. Yeah. True that.
All right, interesting. Arvind, obviously, we can't not talk about the banking sector since you're here, and there's so much happening there. Starting with the HDFC Bank, HDFC Limited merger, the street viewed it as a positive development. Stocks went up for a couple of days, and then we saw a sharp correction. Obviously, there's been a bit of time that has also lapsed since then. But what really just went wrong there?
So one is obviously the markets didn't expect that merger to be announced in April when they announced it, and no one actually had a clue about it. Secondly, the both the HDFC twins are FI heavy, right? So you seeing FI selling on a daily basis, 3 lakh crores sold. So some bit of hit has been taken by both the institutions when it comes to kind of the stock price correcting. It was a 1 day kind of euphoria. We saw the stock went up when the merger was announced on that day, but after that, it's been relentless selling that's kind of kept the prices subdued. But my guess is overall, it's very positive in the sense that you will have cost savings at two organizations which were working separately are going to merge into one entity, and there's going to be a lot of data sharing that will start happening. And over a period of time, uh, see today what's missing in the HDFC bank books is the mortgage book, right? You have banks like ICICI, Axis, Kotak, which have a large mortgage book as high as 30-35% of the entire retail book, whereas HDFC doesn't have that today. So this is going to give them that mortgage book advantage. There are going to be some challenges on the integration front, and when the merger takes place, obviously one is the approvals that are going to take the entire probably 12 to 15 months, as they said. Second is on the integration fund, and some challenges probably on the NIM side. That when you have such a large mortgage book that's going to merge into a 6 lakh crore worth of book is going to merge into 12 lakh crores. So obviously there are going to be some NIM compression that you will see. So markets have probably realized, or investors have realized, the large ones have realized that probably in the short term this could be negative for some time, and once probably then the once the merger kicks in and then they start seeing what is the impact or what are the positive outcomes of the merger, they probably may change their mind later on.
Interesting. Arvind, I just want to stay in theme with the last thing I asked you about. Do you anticipate more correction? But amidst this market scenarios that we are seeing, where there is a big amount of correction, where do you still suspect that there are some good investment opportunities in the market? What are some sectors that bring a smile on your face?
So basically, if you look at it, the index is not showing the correct picture, right? Index is only corrected probably 17-18%, whereas stocks have corrected something like anywhere between 30 to 50-60%, right? And
Right.
mid caps and small caps have been butchered to a certain extent. So the way I look at it today, there's a lot of opportunity available for you to invest, especially on the valuation side. Valuations have become compelling and comfortable to a certain extent. You have defensive sectors like pharma, FMCG, and to a certain extent large cap IT, which should be able to hold better in a falling market and may correct lesser. Secondly, if you look at it, auto sector has been down in the dumps for the last 4 years for various reasons, right? So I feel that auto probably is going to correct lesser than the other sectors, and probably we will see a turnaround in the auto sector in the next 3 to 6 months as demand starts to come back.
Excellent. Thank you for that overview, Arvind. And to all of you who are listening to this StockTwits BI chat, if you have any questions that you'd like to, pass across to Arvind, please send Yash or myself DM, and we'll take the questions across to Arvind. Once again, send us a DM with your questions or comments or thoughts, and we'll bring it up in the discussion. And yep, Yash.
Yeah. Arvind, I also want to get in your thoughts on RBL Bank. Last week, there was an insane 23% drop. They now have a new MD and CEO, but there are concerns about its future, and another PSU bank's head coming in as the head of a private sector bank. There were again lots of rumors going across in most market groups. What is your take on that?
Well, when last week when they announced the appointment of the new MD, the stock took a beating as investors probably didn't like the appointment to a certain extent. But on the functioning of the bank, I think RBI is not going to be so kind of. They would probably be more than happy to kind of see the bank do well. And if there were any concerns, they probably would have appointed an administrator instead of allowing the bank to appoint an MD, right? And last quarter results were fairly decent. There were certain improvements on the NPAs, certain improvements that they saw on the business side. And quarter one results probably will reflect some improvement to that extent. But I don't see it going the way Yes Bank went, or probably a Lakshmi Vilas bank that went probably bust in the last 2 years. Market is overreacting. We see this behavior on both sides, right? Something which is positive, market overreacts, and when something is negative to that extent, market also overreacts. But I am not too concerned that the bank is on the verge of collapse, right? If it would have been on that stage in December itself, when they removed the previous MD, they would have appointed an administrator straight away if they felt that the situation was really bad.
Yeah, I think, but they did appoint an additional director. I think this was in December
Yeah.
when the news had come out.
Yeah, they appointed a director basically to guide the board and probably have some say. And also, they gave time till March or April to appoint a new MD. So we have a banker who's an ex-banker, ex-MD of a public sector bank who's come in. We need to give him time to probably go through the situation, assess the situation, and when he probably declares the results for quarter one in July sometime, we will get to know how the bank has performed and what is the vision that he has for the bank for the next 3 4 years.
Okay.
Yeah.
Arvind, I have some questions coming in, and a quick thank you to all of you who are messaging across to us. And we have Deep Tripathi, whose Twitter handle is Banker Poet, and I would love to know the genesis of that someday. And Deep is essentially asking in on your sentiments around crypto. What are your thoughts around there?
Again, at 60,000, when Bitcoin was 60,000, everyone was bullish that it'll go to 1 lakh probably. And now everyone's negative on it. So I don't know what the real value of Bitcoin is. So very difficult to kind of figure out. Uh, Maybe they'll turn around from here. Maybe they'll fall more. It's very difficult or anyone's guess for that matter.
Lovely, thanks for that. And also have a question coming in on mid caps. What's your take on this sector at this point of time, Arvind?
So if you look at it, mid cap and small cap story plays out once in 2 years, right? If you look back in history, 2018 January was the top for mid and small caps. Then the story started somewhere in late 2020 or early 2021 when everything started to go up, irrespective of what the company was, what the corporate governance was, what the business was. Everything was flying off the shelf, right? So now we've seen that that excesses that were built are correcting, right? So probably you will see a lot of exits from mid cap small caps where people have lost money. They will try to protect their capital whatever they can. And then once they bottom out, probably the next cycle will start sometime in the next 12 to 15 months and they start going up because history suggests that mid cap and small caps have that cycle which runs probably for 2.5 years, and then it starts to kind of correct and go out of favor. So look at the last 2 years, large cap were out of favor, mid caps and small caps were kind of outperforming the large caps. So now my guess is that there is lot of uh, valuation comfort in some of the large caps. So probably money will get parked in these large caps, and mid caps probably will take some rest from here on.
Arvind, I want you to come in on the Axis Bank deal. So they had acquired Citi's retail assets for $1.6 billion. Now, again, this was construed as another re-rating trigger for the stock, but we've just not seen Axis Bank move at all. Um, any idea what's going on here, or what could be the potential trigger for the stock to move?
So one is Axis by signing of the deal is getting those assets, right? And secondly, they're getting a very talented and trained team, right? I know for a fact that the Citibank relationship managers, the operations team is very good at what they do, right? So they're
Hmm.
getting the staff along with the deal, so which will add basically that from day one they can start booking new business at various locations where City was present, and City had a geographical constraint because they were present in not very many cities because they don't get licenses very easily from RBI. So obviously it supplements the acquisition engine of Axis to that certain extent. Uh, it also gives them a large credit card base, some 25, 26 lakh customers. I would
Right.
assume that even 75% of those customers whom those customers on the spends are really very high as compared to other banks, right? They're premium customers. Then you have the wealth management relationships. So Axis probably should be able to cross sell a lot of products to the base that will move to from City to them. Hopefully, over a longer period of time, this should be positive. But like you said, that markets did not probably take it uh, uh, in that sense in a positive way. So we've seen Axis correct to a large extent from 750, 780 to 625, 630 right now. But my guess is that long term positive for Axis Bank. And the other thing that Axis has really cleaned up their books in the last 3 years under the new MD. So they are now focusing more on the retail business than on the lumpy corporate business they were famous for probably 5, 7 years ago.
Right. You mentioned about the credit card business, and we know how lucrative it is for these banks.
Yeah.
Now, recently, the RBI clarified that these new age startups which were giving out prepaid cards and mobile wallets cannot extend credit lines or use them for micro lending purposes. What is your take on this? Because they were dubbed as the credit card killers with these services. Will this benefit banks, and who would be
I think banks would get benefited out of this regulation that RBI has brought about. But there seems to be a lot of gray area currently. Even startups are confused that what exactly they can do, they cannot do under this regulation. So we'll probably have to wait for certain clarifications that the startups or fintechs probably will seek from RBI. And once we have more clarity, we will get to know that how beneficial it is to the banks or how much negative it could be for fintechs.
Arvind, we have somebody asking a question in a very convoluted way, but it's interesting nonetheless. And
Yeah.
this person is asking us, why would any company want to go into an IPO at this point of time?
So the IPO market is dead. If you look at it, I don't know if there's any IPOs that have been marketed after, let's say, LIC or May, because no one, after the experience people had with Paytm and other IPOs that came in, Car Trade, Sapphire Foods, PB FinTech, and probably LIC being the last large IPO, people have burnt their fingers. So today there would be no demand because everyone's struggling on the secondary market side that the portfolios are bleeding. Who would probably invest in an IPO today? So I think IPO market will take time to revive. Probably another 6 to 9 months when markets bottom out and things start to probably settle down. Then you will see some of these IPOs, and only the good ones come first, because last 6 9 months was or every Tom, Dick, and Harry had come to the market at absurd pricing. So now that thing has actually stopped, and only good IPOs which are priced right, which leave some value on the table for investors, will get subscribed to.
That's a lovely and a very clear indication of your sentiment there. Thanks for that, Arvind.
Yeah.
Yash?
Arvind, I just want to add to the previous question I asked you on fintech. So, there was a general belief that these fintech startups will cause the same kind of disruption that e-commerce had on grocery and clothes shopping. Do you believe that this argument is a bit over exaggerated?
See, there would be some challenges for traditional banks. I won't say that they won't have it. Fintechs will probably gain market share in some of the products. It could be probably unsecured loans, probably some other products that they launch. But at the same time, today, the traditional banks are well prepared to take on fintechs, right? So some of these traditional banks have gone into partnerships with fintechs, and also probably tomorrow they will look at kind of acquiring these fintechs to kind of strengthen their the entire process or platform to that extent. So one, obviously there would be competition, and which is good in that sense that some market share or some products probably will do well for fintechs. And then you can see probably some partnerships that may come in with fintechs and traditional banks, like you have HDFC and Paytm doing some partnership on the credit card sourcing side. Then you could have some of these banks probably can outrightly acquire some of the fintechs and merge into themselves for the technology or the process they bring to the table.
All right. Um, Arvind, just one more question that I have. Again, now this pertains to the insurance sector. We know that a lot of people have been bullish on it. India has a very low insurance penetration.
Yeah.
Somehow, we haven't seen that pass through in terms of price action. Any reason why we've seen this underperformance, including obviously the latest IPO being from LIC?
So basically, insurance is a sunrise sector today. If you look at it, what private banks was probably 20 years ago, the life insurance, the general insurance sector is there at that point in time. So if you look at the penetration of insurance, life insurance is probably 3% to GDP, the penetration. And
Hmm.
if you compare to home loan penetration was 2% in the year 2000. Today it is at 13%, right? So it's 6x, 6.5x in 2021 years. So same story will play out in insurance, but it's not going to be overnight, right? We have seen that Corona has changed the mindset of people, how they look at insurance today, right? People who've lost loved ones, the breadwinners, they realize that there was no insurance. Now they're facing a lot of issues or challenges when it comes to kind of managing their day-to-day affairs. So people are getting more and more of kind of aware of the protection issue. Secondly, the industry also has to change. That industry probably was is selling today more of ULIPs than probably the pure insurance products like term plans, etc. So we will. There has to be some amount of education to the investors as well, or customers as well, that for insurance probably go with the term plan. For investment, go to a mutual fund, right? I am very bullish on the insurance sector because of this entire what do you call, the valuation that run up extensively way ahead, basically. And now we're seeing that correction. Even today, the valuations are not cheap for some of the private sector players, but I
Hmm.
guess the growth is ahead of them in the next 5 years, 7 years. They should be able to do well. And secondly, like there was a challenge that every time you wanted to introduce a new product, you have to go to IRD and get the approval. But I think now IRDA has given some room to insurance companies that some of the products they can design and launch on their own without going back to IRDA for approval. So that probably could be a small positive for insurance companies.
Arvind, when you say that there's a renewed interest in insurance products, I'm very keen to know if the renewed interest is coming in from the younger people age group, or is it still in the mid and the older segment? But I know, in the sense that this is something that I'm going to be looking up after this chat. But thanks for dropping that little line for me to go and see as to where is this interest coming in, because that could effectively dictate how the sector is going to go over the next decade, depending on who is the one who is jumping in and looking at buying these products.
So my guess is that it's the younger generation, people who are starting up with jobs or who've been in jobs for 3, 4, 5 years. They are well aware today that insurance is a must-have product for their family and loved ones. If something were to happen to them tomorrow, at least the family will be taken care of. The earlier generation was more sold on the traditional products that you had, the money back policies
Right.
or the ULIPs,
Mhm.
etc. So people today are kind of more inclined towards term plans. The younger population, that's what my view is.
Got it. I have a message from Nick, and he's essentially asking you for your opinion on the FMCG sector. How do you see that at this point of
So,
time?
so FMCG, if you look at it, 2020, everyone was super bullish. Then the sector took a backseat because of sector rotation. It's been kind of very sluggish in the last 2 years. Then there were margin compression, inflation pressure on raw material cost, and down trading by customers because of various reasons, that people were going through challenges on the job front, salaries getting reduced, people losing jobs. But I think we may be coming out of that challenge now, and things probably from here on will look better. We've seen recently that with some of the raw material costs have come down, but they're not passing on these cost benefits to consumers. So which will help them to kind of maintain their margins or be slightly positive. So in next month when we have these results coming out, we will get to hear commentary from various FMCG players that how the last 2, 3 months have been for them and what they see in the next 3 to 6 months. My personal view is that probably the worst is behind them for them.
Okay. Well, Nick, I hope that answers your question and leaves you with a smile if there's something for you to look at and if you're deeply invested in the sector. So thanks for your message, man. Yes.
Arvind, I just want to circle back to the previous question on insurance, and you said that you're bullish, but I think we only spoke about the private players. Any thoughts on LIC then?
Uh, I will wait for the quarter 1 results probably before I kind of make my mind or make an impression on the stock. It's
Mhm.
been a disappointment that in the last 1.5 months people have lost a lot of money. Secondly, the other thing is that LIC has been losing market share to private players. It's a huge giant still today that we see,
Right.
but we have to also see how LIC is shaping up to take on the challenge from the private players. So we will get to hear the management commentary. We will probably have to see how they are kind of changing themselves or transforming themselves to take on this competition. and how the results are going to reflect on this transformation that they kind of embark upon. So
In fact,
probably I will give them 6 months, 3 to 6 months before I kind of make up my mind or an opinion on the business.
In fact, we have Rachit who's just messaging me right now, and he's saying that he sees that the underperformance in general insurance is due to health, is what he says. And he says all the segments of them are profitable except health. So that's his observation coming in.
Yeah,
So
so that is a fact. Like life insurance companies had huge claims, death claims due to COVID. They were bleeding because of those claims, and secondly, like your general insurance is bleeding because of the health claims which have gone through the roof in the last 2 years. But now we've seen that claims have dropped in the last 3 months or 6 months, and hopefully they will normalize in the next 3 to 6 months.
indeed. Yash?
Uh, Arvind, I just have one last question for you.
Yeah.
Um, on Paytm and Policy Bazaar, they've corrected significantly, almost down 50% from their IPO price. Valuations have turned all right. We're seeing globally tech stocks have sort of bottomed out. Are you buying any of these companies now, or do you still would prefer staying away from them?
Policy Bazaar is a very good business, a very good platform business. They have a lot of insurance companies that they sell products for. People go online and buy it. If you even, I have studied Policy Bazaar and Paytm, both financials for both of them. Policy Bazaar at the gross level is positive, profitable, but because of their marketing spends being so huge, at the net level they have a loss, right? So we don't know that till when probably they will keep on investing in their marketing side, and how much of a revenue growth they will attain in the next 3 4 years, which will probably take them net profit positive. It's a good business though, but what valuations one will buy, I am not too sure about it. Paytm is kind of uh, uh, payments, mostly payments which don't make money, right? UPI, we all know, doesn't make money for anyone, right? Unless until government or NPCI brings in some amount of charge for those payments, probably Paytm will be struggling. And the second part for Paytm is their what do you call the loans business that they kind of source for some of these lenders they have tie-ups with. But again, it's a business, a low margin business that it could probably give you 1 or 2% of fee income, right? You do 4,000 crores, 5,000 crores of loan in a year, to probably 10,000 crores. You end up earning fee income or referral income, which is to the extent of 1 to 2%. So that's yes, a good source of income for them, recurring source of income, as people go on the Paytm platform and apply for insurance or loans for that matter. uh, but till the time the payments business, which is their bread and butter business, starts to generate revenue, then only probably we will see some sentiment change coming in Paytm. It's almost 75% down from the IPO price.
Well, thanks for that, Arvind. We still have a couple of questions coming in from all of you, and I want to give you all a big thank you for reaching out to Yash and me via our DMs. Also, want to give a shout out to Avinash Gorakshakar, who was one of our earlier panelists, and he's listening in. And we also have Lalit Rati from LKR Advisors, who's listening in. Hello, big hi to both you gentlemen. Thanks for listening in this evening. And big thank you to all of you who have been reaching out to us. We've got two more questions that Yash is going to lead before we wrap up for the day. And I know, Arvind, that we have gone past beyond the calendar time that we have blocked for you. Just a couple more, and we should be closing in. Yash?
Yeah. This reward, you can go ahead and ask a question.
Risk reward?
Hello.
Yes, we can
Yeah.
hear you.
Go ahead.
Sir, can I expect Network 18 multi-bagger next 5 years after got IPL digital rights?
Sorry, what is your question? Could you repeat it, please?
Network 18, sir. Stock name Network 18. Can I
Honestly, I don't have an answer which stock will double or which stock will be 5x from today. But all I
next
take
five
for
years, sir?
advice.
Next 5 years is
See,
for an
see, if someone knew, obviously they would have probably been the richest people on earth, right? So that's the beauty of investing, that invest in companies which have good cash flow, which have good business, recurring business to them. They are market leaders in their space. And then once they start delivering, obviously the financial performance reflects on the stock price, right? Saying some stock can be 5x, 4x, 3x in the next 5 years is really impossible.
Arvind, I have one question. Okay,
Yeah.
no, I think we have one more
We have
speaker as
Rachit
well.
who's online.
Yeah.
Hey, Rachit, you're live, man.
Hi, sir. Good evening. Sir, Arvind, sir, what I have two questions for you. The one is that you are saying that the COVID has brought in a lot of recognition for these insurance companies, and people have understood the need of it. But there is a concept in finance called saliency bias. You know, that happens with that whenever an event is near us, we always try to ascertain a lot of probability of that occurring again and again. But once that event is out of place, then people again mean revert to their original attitudes. So how much of that can play in the insurance sector? And second point is that other lot of people, lot of industry veterans who I talk to, they always say to me that there are two important points that is needed for insurance sector to fire. The first is the GST reduction that is there on the insurance policies, and the second is that the health claims, the hospitals overcharging that is present in this particular sector. This has been a drag on their profitability, not just for last 2 years but for last several years. And my father actually is in the management of New India Assurance. He always claims that, you know, for example, the company generates 6,000, 7,000 crores of investment income on a regular basis, but their overall profit is just 164 crores, and their all
Yeah,
other segments are profitable except the health one. So the amount
yeah,
of losses in the health segment is
yeah,
astronomical in this particular.
yeah.
And and I also want your view similarly on the Star Health, because they are the ones that are actually only in the health segment, and they are trading at 45,000 crores market cap, while New India is 15,000, 10,000 crores, around some of that level. So like yeah,
Rachit, that's a
your
lot of
views on that.
questions to keep a track of.
So,
Can we go
so
one
Okay,
by
okay.
one?
you
Yeah,
have raised very valid points and hit the nail on the head, right? What happens is that I do agree that hospitals overcharge patients and they bill it to the insurance companies. So obviously, when such a thing happens, what will IRDA do? IRDA will raise insurance premiums, right? Who suffers then? The customer suffers at the end of the day. So we have to, this balance has to be maintained, whether it is hospitals, whether it is customers, that they should not be deceiving the insurance companies because they are killing their own golden goose, right? One is this, maybe IRDA or probably the regulators have to bring in some kind of regulation, or probably how do you kind of discipline the hospital networks basically from overcharging. One. Secondly, on the saliency side, you said that COVID has been a game changer event or a life changer event, right? I don't think that people will forget that so easily. People who've lost a loved one, right? It's not going to be forgotten so easily. And secondly, like insurance, GST, yes, GST is pretty high on insurance policies. If you look at it, 18% is pretty high. I also assume that the government the insurance companies should be representing through IRDA to the government that if they can probably bring down the GST component, the sector can kind of fly. And it's only going to help government get more taxes if there is a lower GST, right? It's always a trade off that you have a higher tax rate, people are not buying. You kind of reduce the taxes, reduce the premium, overall premium, the composition of the tax, people will start buying, and government gets compensated by higher tax revenues on the absolute side. So it's something that government has to probably also see through to it. uh, that's about it. And comparing New India to Star Health, because I think Star Health as a marquee investor, as a shareholder, there are more people who follow him rather than a New India, which is the leader in general insurance in India.
That's true, sir. That's true. Thank you for your responses. Thank you so much.
Thanks, Sachin. Arvind, we have one more question coming in from a listener. His name is Vidya Sagar. He wants to know what is your thought on the whole ethanol and biofuel space.
Uh, we have to see how it progresses. The story has positive inclination for the industry as a whole, the ethanol producers, etc., and also it kind of helps reduce our crude oil bill to that extent. But every story, there would be for every positive or a couple of positive, there could be something negative. So we have to also see that. When I talk to some of my friends who are the auto industry, they probably see that if 20% blending has to come in, there would be some modifications required in the engines of these cars. So we don't know honestly where we stand, and probably I will wait for some more time to see how this roadmap for ethanol blending is progressing before we kind of take a call.
All right. I guess, Ashwin, we will wrap up any questions that you have possibly from any of the listeners.
None. As of now, I think we've wrapped on all of that, and I think it's been a great run. Thank you so much for your time, Arvind. It's been a delight to have
Thank you.
talked
And
with
I think one last comment that I want to make is that India is a secular growth story, a consumption theme. Uh, Stay invested, keep investing every month in good quality businesses which are leaders in their space. And I'm sure you're going to create huge wealth for yourself. And we are also an under penetrated market. Anything that you take, our penetration levels are far lower than what you see in some of the other emerging markets or probably the developed markets.
lovely words to end our chat.
Yeah,
There's a lot of hope and growth. Thanks for that, Arvind. Really appreciate
thank
you
you.
guys, and
Really, I enjoyed this talk. Thank you for giving me the opportunity.
our pleasure, sir. We'll look forward to having you back